On Tuesday, the euro extended gains as part of a bullish correction driven by upbeat data on economic sentiment in Germany and the euro area. Then the European currency reversed, weighed down by statistics on US retail sales, which increased by 0.7% on the month, well above the 0.3% estimate. Although the indicator proved to be better than expected, it was still below the August reading, which allowed the euro to resume its bullish run. Besides, traders digested fairly upbeat reports on US industrial and manufacturing production. With data showing that the economy is still humming, the Fed is unlikely to take further rate increases off the table. At the same time, some policymakers look set to hold interest rates steady, saying that there is no need to rush into further tightening. Meanwhile, the British pound is stuck in a sideways range. The market has already received fresh data on consumer prices. Inflation in the UK held steady at 6.7% in September, bucking economists' expectations for a further decline. On a monthly basis, consumer prices ticked up by 0.5% in September, above forecasts of 0.4%. The news has raised the possibility of a further rise in interest rates, thus pushing the British pound up. Before we get into technical analysis, let's see what other news releases are ahead. Today's macroeconomic calendar includes data on inflation in the euro area. Annual inflation is expected to be 4.3% in September 2023. Core inflation is forecast to come in at 4.5%. Notably, ECB President Christine Lagarde expressed concern over rising energy prices in her recent speech, adding that the central bank would rely on core and consumer prices as a reliable measure of underlying inflationary pressures. Given that core inflation is likely to remain high, the European Central Bank may well lift interest rates at its next policy meeting. Today, Lagarde is set to deliver another speech. The United States will report statistics on building permits and housing starts. This data is of crucial importance as the state of the housing market has a direct impact on inflation and the regulator's policy decisions. Furthermore, traders may take notice of statements by Fed officials. If policymakers signal that they are inclined to forego a rate hike at their next meeting, the US dollar will come under more pressure. From a technical point of view, a false breakout at 1.0594 will create a sell signal, thus bringing the euro back to 1.0563. If the price breaks through and fixes below this level, the European currency will dip to 1.0540. At this mark, I recommend going long on a rebound to catch an intraday correction of 20-25 pips. A bull case scenario is possible in case the price forms a false breakout at 1.0563 or consolidates above 1.0594. A breakout of 1.0594 will make it possible to go long, counting on a surge to 1.0617 and 1.0638. At the level of 1.0638, it would be a wise decision to go short on a rebound to catch an intraday correction of 15-20 pips. Short positions at 1.0617 can be considered only amid a false breakout. Relying on euro area inflation data is too risky. On the one hand, rising inflation may drive demand for the European currency amid a potential rate hike. On the other hand, rising inflation and higher interest rates have a negative impact on the economy and may drag the euro down. Thus, forecasts are rather mixed. Speaking of the British pound, if the price breaks through and consolidates above the key resistance level of 1.2222, traders are recommended to go long, counting on the rise to 1.2267. At this level, it will be possible to go short on a rebound in the hope of an intraday correction of 30-35 pips. Alternatively, a false breakout at 1.2222 will create a sell signal, thus pushing the British currency down to 1.2179, the middle of the sideways range, or 1.2147. Long positions at these levels can be opened only amid a false breakout. Going long on a rebound will be relevant only at 1.2109 with a view to catching an intraday correction of 35 pips. Best of luck.